All right, we are live for the Friday edition of the Mike and Mario Show. Excited to be back. What a hell of a week, and it's only going to get better. But before we move forward, Mario, how you doing, my friend?
Yeah, I'm doing well, Mike, and you?
Not bad at all. It's getting a little chilly outside, but I'll take it. But what an interesting week to say the least. We've had a couple interest rate hikes. One central bank admission failure with their recession concerns, and one here on our side. I don't know what's going on, or that's what they're leading us to believe, but. Looks like currencies are taking a hit, and you name it. Markets are down right now. So basically, where do you want to start, my friend? It's up to you. Where do you want to start?
Yeah, let's start actually with the Japanese yen
Okay.
because it's part of the dollar index, and it's been melting down all year for the last 6 months or so. Yes, the Japanese central bank intervened the other day, but it's still really weak.
Yeah.
And then we move to the pound. Pound is part of the dollar index as well. It's just below the yen.
Mm-hmm.
And that's really accelerated lower. We're down, I think, like over 2% today. It's a real meltdown. And then you have the euro, which has also come down a lot and is a huge part of the dollar index. And I'm going to bring the dollar index here and share with you guys because there's a lot of talk about the dollar index.
Mm-hmm.
Let's see.
Yeah, and on my side, as I mentioned before, just a lot of people are, especially in the U.S., the dollar is how we use and measure things, and so as it's strengthening, people still have that sense of confidence that we're going to be the last ones to be on this little gravy train until. And I think it's good to mentally prepare yourself for the day that the USD is no longer the
I
ideal measuring stick.
Really explain this because I think people need to be really careful with the dollar. Especially Americans, because they're seeing the dollar really strong.
Mm-hmm.
But I think let's see if I can get it now. No,
so we got
Chrome tab. Okay, I've got it here.
Yeah, go ahead.
I'm still trying to figure out how to use this. Yeah, so you see the dollar index, as you can see, is 57.6% euro, 13.6 Japanese yen, 11.9 pound, and then Canadian dollar, Swedish, and Swiss franc. And the dollar index, the reason it was invented in 1973, it was started in 73 in March, as you can see here, is that in that year, all the current major currencies of the world, they went on a floating rate regime. They used to be fixed to each other because of they were fixed to gold indirectly through the dollar. And now they wanted to have something to measure the currency, so they started the dollar index. And guess where it started? Well, it started at 100 back in 1973, and right now I think we're around 112. So has the dollar been really strong? Maybe a little bit, but over 50 years almost has only gone up 12%, while gold back in 73 was $85, and now it's at 1650 or thereabouts. So, and a lot of people, you sent me an article, I think mainstream financial news, they said dollar making record highs. But you look at it here, no, it's not. We might be here around 110, but the record was really here at above 160. So yeah, I think people need to really be careful about that. The other thing I was talking to you about is that if you look at the euro versus the pound, since the beginning of the year, we've gone from 1 euro used to fetch about 82 pence. Now it's almost up to 90. So you could say, wow, the euro is really strong. All I'm trying to say here, all these fiat currencies, they have relative value against each other. So we need to be really careful, I would say.
Right, here's that visual aid that you're referring to in reference to the euro strengthening against the British pound.
Yeah, there you go. I mean, we could argue, oh, the euro is really strong.
Right. So it also is relative. It all depends on what currency you're using, what country you're in, and how do you price and value
the reason why I think the dollar is strong is because if you go back to 1944, when the Bretton Woods system was signed, or Bretton Woods Agreement, the dollar was at the center of it, and it still is at the center of it, even though Nixon closed the gold window.
Right.
And I think the system is unraveling right now, the fiat
Right.
currency system, and the dollar will is a bridge, so to speak, from these peripheral currencies to safety. But
Right.
eventually, people are going to jump from the dollar too. That's the way I see it, and they're going to jump, of course, to anything that's physical,
Right.
and it could be any commodity or real estate, and also gold and silver, of course.
Right. And just look at how right now we're witnessing the Dixie weighted basket. The dollar is strengthening relative to all those other currencies because people are literally dumping and running from those other currencies into dollars. And so at some point in the either near future or long-term future, when people decide to run from the dollar, where will they run into? And based upon historical events in the past, people tend to run to things tangible as you're mentioning. So it's just a matter of time. So it's relative. It has its time frame.
Yeah. The other point I'd like to make is about the government bond markets,
Hmm.
because fiat currency is the other side of ready money, which is money we use every day,
Right.
are government bonds.
Hmm.
They back the currency, and if the dollar was so strong, I would expect U.S. Treasuries to be strong and yields to be actually dropping.
Hmm.
But yields all over the world are dropping, which means people are running away from government bonds.
Yeah.
And you might want to show the UK government bond market today. We had a mini budget, and look, I mean, this looks green, but it's really bad. It means yields are up
Hmm.
massively. Up until a few weeks ago, that 10-year yield here that you see at 385, that was just below 270. And I think last year or in 2021, yeah, 2020, 21, it was it's less than one. So it's moving rapidly higher. And also the 2-year, for example, is that 4. That was below 50 basis points up until last year. So all financing costs are going to go through the roof for
Hmm.
governments, for corporations, for people who have mortgages. It's going to be it's not good.
Yeah, I saw a visual aid that someone put out about the 2-year Treasury. How prior to the whole little pandemic or the beginning of the pandemic situation, it was at like a quarter, and
Yeah,
now it's above like almost damn near four
above
percent.
4%, I think,
And
right now.
like they showed a thing, and it just looked like it was like off to the moon. And they was basically saying this is not good.
Yeah,
This is not a good indication how fast it has risen
yes.
in such a short period of time. Oh my goodness. So here's a question for you. Based upon the current trajectory of all these bond yields heading upward, service costs for the government is going to become problematic. And so from a fixed income standpoint, for those who have bought previous, debt instruments, like how will they fare in this current environment of extremely high yields, in your opinion?
Well, let's say you bought let's say last year you bought a 10-year treasury note.
Hmm.
And when you bought it, the coupon was, let's say, 1.5%. So you bought it at par.
Yeah.
So now the yield is like over almost 4%.
Hmm.
And, but you're not getting that yield because you're getting the 1.5%, and your principal is dropped. I'm not sure where the price would be, but let's say it's dropped to 90, because
Hmm.
when bond prices go down, the yield goes up. But the thing is, if you buy it with a coupon or a yield of 1.5%, if the yields start going up, you're not going to get that yield, and your capital will. If you wanted to sell it now, you're going to lose out.
You're gonna lose. Yeah.
So it's really bad for people who have bought bonds,
Yeah.
and that's probably why it's a good thing to buy bills, which are up to a year,
Hmm.
because then you can reinvest it at higher rates. But long-term bonds are a disaster in this environment.
Yeah. So here we have.
But they're good for if you've got a lot of savings and you didn't put it into bonds. You
Mhm.
might want to put a little bit, let's say, in a 2-year note, and you're going to get 4%, which is not bad. But in 6 months' time, it could be at 6. But
Yeah.
then you wait a year and a half, and you could and you're going to get your money back, you could put it on for 6.5%. So I would say it's not a great environment for fixed income investors, but if you do need the income, you should stay in the short end up to
Mhm.
like 2 years. This is not financial advice, of course.
Right.
It's what I think you would want to do, and of course, have some physical gold and silver um, as well.
Now, I'm curious, and so just looking at these yields here, U.S. debt, and so we got the 2 and 10, and
Yeah,
I'm hearing more and more figures about this is a whatever the length of this yield curve inversion is historical in nature. I think I forgot what the latest figure was, but how high could this yield curve
yeah,
inversion go before? Because at this current moment, it's continuing to be protracted and prolonged.
yeah.
So does it
I
really
think.
matter?
Right now, if you look at your chart there, it's your numbers. It's about 20, 30. It's about 50 basis points inverted. The difference between 417 and 371,
Mhm.
and apparently this is the most it's been, the biggest spread since the Volcker era. And
And
a lot of
there it
people
is.
say that this yield curve inversion indicates a recession. And why is that? Well, because banks usually like to borrow money like short term and lend
Mhm.
out long term. That's how they make their profits. But right, but if you're going to be borrowing at over 4% and then lending at 3.7, you're not going to be borrowing, and that's why it like signals a recession.
Mhm.
But at the same time, um, if they don't get control of prices or
Mhm.
inflation, as they call it,
Yeah.
you could actually see the uh, the longer end start rising quicker, and you
Mhm.
could see a steeper, what they call steeper instead of inverted yield curve. That would probably mean that the Fed has pivoted and they're going to inflate again by pumping credit into the short end.
Yeah.
So there are a lot of people who still think that eventually you're going to go back down to zero again in terms of rates, and that the 10-year yield is going to go down to two.
Mhm.
I think they're wrong about that.
Yeah, I'd agree. And then based upon this past week, let me just put these let me grab this over here. So here we have just this week alone. We've had looks like 8 rate hikes, or 6 rate hikes, and two. We had Turkey and Russia both deciding to drop their interest rates. But then again, Great Britain, as of today, you guys went up, looks like half a point.
Yeah,
And then
yesterday.
yesterday,
Yesterday. Well,
and then
The Swiss, they raised by 75 basis points,
yeah.
and I think they were the last. I think maybe Japan still has negative rates, but
Mhm.
they're the last of the European countries to have a negative rate.
So yeah, this definitely does not will fare well. So they're hiking at the same time, as I mentioned. Let's just jump in this. So the Bank of England admitted to a recession.
Mm.
And so here on in the West, Powell the other day mentioned that they don't know if this is going to result in a recession or
Yeah,
not. Of course, we
I
all
don't think
know.
Powell doesn't know what inflation is. He said we don't know about inflation, so he doesn't know about recessions. So he's a total ignorant central banker, I guess.
Right. So what exactly is his job? What exactly is he here to do if he don't know what he's doing? Of
I
course, on
guess
top of that, he's a lawyer, so
yeah, he's
economics is not his background.
making sure his buddies in the private equity world and Wall Street have their liquidity.
Yeah. And so here's that from the other day. And he's quoted says, "We don't know. No one knows whether this process will lead to a recession, or if so, how significant that recession would be," Powell told reporters. So very interesting there. But we know what's really happening. And recession is what we're in currently. And they are concerned or not concerned as to whether or not this will be full out blown depressionary style event, because something will break. Just a matter of when.
Yeah.
Now, okay, we keep moving. I got a couple more
I think
questions.
about Powell. I think he does know we are in recession. It's
Right.
just that they're propagandists,
Mhm.
central bankers. That's all they are, and
Right.
they're just trying to like fool people, just to keep their game going, whatever their game is.
Let's touch on this article real quick that you sent me about what's happening in the UK. So utilizing the UK is a great example as to what we can eventually experience over here, in reference to the continued use of debt to try to, I guess, what inflate their way out of this mess they're in over in the UK.
Yeah, well, this guy, I saw someone tweet that,
Hmm.
and then I found the article, and this guy is called Martin Sandbu, and I looked him up. He's a Norwegian economist, Harvard and Oxford educated, of course, and he's advised governments, and he's basically saying it doesn't matter, if we borrow too much or have inflation. Uh, Basically, he's saying it's better than not, and he
Hmm.
seems to think that inflation is a positive thing. And we know that inflation is basically cheating the savers and people who use the currency.
Right.
But what concerns me is that the FT gives him the light of day to
Hmm.
put his ideas across, and the fact that he advises governments. So, do
Yeah.
you really want to keep holding too much fiat currency in your savings account? I don't think so. I told you I just bought some gold through Glint. I
Hmm.
do have physical gold, but I had some savings that I keep, unfortunately, for the tax man.
Hmm.
So when I do my tax return, I know exactly. So I had quite a bit in there, and I said, well, with the pound melting down, even though it doesn't matter because I paid the tax man in pounds, uh, I still want to put a little bit into you know, into something more solid. And you have guys like this saying it doesn't matter. I mean, uh, I guess he writes for the FT, which is a
Hmm.
globalist mouthpiece. They're they are financed through advertisement by the major banks and hedge funds. They're not thinking of the average public
Right.
that is really suffering with this, and is going to suffer even more now with our currency going down the tube.
Right. Very true. Very true. And so, like, he's a primary spokesman for the whole MMT model or concept, which is basically what he's advocating for, where debt expenditures don't matter, just continue to just monetize
Yeah.
everything and print until oblivion. All right, so let's let me see. I see I see a lot of questions thus far. Let's get to some questions real quick, and then we got a couple more articles we can come back to.
Rolf
Uh,
Steiner is asked here.
which one?
Can Mario
Could
comment?
Mario comment on the Japanese dumping U.S. bonds to raise USD to try and buy the Japanese yen and keep the pay? Japanese 10-year under 0.25. What will happen when the Japanese dump all the U.S. debt? That's a
Well,
nice little
the
question there.
Japanese, let's see, Japanese dumping bonds to raise dollars to try and buy up the yen. The thing is, yeah, I mean, they could do that, and maybe that's why
Is that what they're doing? Because I heard they literally
well,
they're supporting
intervention.
the Japanese
Yeah,
yen. They sold something.
I guess to intervene, they have to sell dollars. So
Hmm.
yes, it makes sense. The Japanese central bank probably holds a lot of treasuries, so they'll sell the treasuries, and then with the cash, they'll buy yen in the FX market, and that's what they did yesterday. And yes, this will hurt even more the bond markets in Western Europe and in the US, because Japan has been like a how can I say it's not nice, but it's like a prostitute for the Federal Reserve and the
Hmm.
Americans, because they'll print all this money to keep buying JGBs to keep them low, their yields, so that Japanese investors go and buy treasuries, right?
Hmm.
Because treasuries yield more.
Yeah.
But now, though, if they start selling U.S. Treasuries as well, that could accelerate, the value. Treasuries could spike up even more the yields, and
Hmm.
Japanese investors might even want to sell treasuries, because if the yen starts going up,
Hmm.
they're going to start losing out on the treasury price and on the yen, on the dollar, because the yen strengthens. Up until now, they're okay with treasuries going down because the yen's going down as well. So it's quite confusing.
Yeah,
Uh,
it's extremely
I
confusing.
don't think the intervention by the Japanese the BOJ is going to work. un unless they stop this, yield curve control on the 10-year JGB,
Yeah.
and unless they start raising rates, because everyone's raising rates, Mr. Kuroda, he's
Mhm.
the BOJ head. You need to wake up and smell the coffee and start raising rates if you want your currency to strengthen.
Yeah, and this is like just amazing how we're talking about the debt market and the currency interconnection and how they're dumping this to buy this debt, and it's all we're caught in the middle of all of this.
Yeah, and it's
We're-
all so leveraged as well. You have the banks doing the trading, you got the hedge funds, you got derivatives. It's such a mess, the
right, it is
financial markets.
extremely confusing to say the least. And speaking of which, let's because as of right now, let me refresh the page here. So I saw markets across the board were all trending
Oh,
in
yeah,
the
right now
red.
the Dow is down 608 points,
Yeah,
and
that's
that's 2%. The Nasdaq is down 2%, S&P is down 2.2, and the pound is down 3% now. It's at 109.08.
yeah.
And,
So this is this a mini Black Friday type of event we're experiencing here?
yeah, I would say so, things could get worse on Monday. You
Yeah,
know, a lot of times, uh, uh, bad Fridays, evolve into Black Mondays too, so
Black
and
Fridays evolved to
yeah,
Black Mondays.
one
Uh,
other yeah.
yeah, and then we're looking at, and so it's just interesting how everything has to be in the red. Like, the silver and gold both started off decent until this morning. I think the PMI figures came out and all that stuff
Yeah,
like that. And sure enough, boom, 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 boom.
well, I think,
It'll recover.
gold and silver, they're caught in the, because most people look at gold as a commodity, but,
Hmm.
I look at it as a currency, and, it's been caught in this,
And the
uh,
crosshairs of all
pound
this
collide.
monetary
Yeah,
confusion.
because if you look at, the price of gold in, and I can share this with you guys. I'm gonna hold on. Share.
Yeah. So Pablo says metal's taking a hit, however, premiums are up.
Yeah, well, because there's still a lot of demand for
Right.
the real thing.
Right. And
Uh,
also, I saw people talking about the whole gold premiums with China, like how
oh yeah,
premiums are up now. I think you did a video earlier about that as well.
yeah. So
And
I'll
so,
just show you here the, price of gold in pounds. This is the first time it's above 1,500 in, I think, in weeks or months.
mhm,
And so for me here, yes, it's not nice to see gold go down in dollars, but uh, in terms of pounds, I'm quite happy because it's doing its job. And
mhm,
it started the year at 1,350.
mhm.
So it's up over 10%. So
Right.
that's what I'm trying to tell, even Americans, that they need to, keep not take their eye off the ball and be
Mhm,
distracted by the dollar index,
mhm.
because what's happening to the pound, is going to happen to the dollar, but it's going
Right.
to be against real things.
Right. Right. Then that goes back to the point of like it's relative to what currency you're pricing it in and what region you're in, because every country is responding differently in this current,
Yeah,
monetary
and
crap that's going on.
I started writing back in '06. I kept a blog when I was still working in the city called
Mhm,
foursoundmoney.com. I don't have it anymore, but I said, fiat currencies, they're all sinking. And I said that they sink at different, rates. Sometimes one sinks faster than the other, and the
yeah.
other goes up. They can, for a fiat currency to sink, another one has to go up. But ultimately, when the whole system, collapses, the only two currencies or money that are left are gold and silver, and also hard assets, anything that is real.
Right. Agree. 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 Okay. So I see more questions popping up. Here's one from SDRC 91216. It says, could Comex set silver at 50 cents an ounce and close down with force majeure?
Well, they could do that, but they would look really ridiculous.
Because nobody would honor or respect that price whatsoever. So,
Well, and no
uh,
one would want to deal with them anymore.
right. Will it all collapse? Plan reset. Jason says, "Will it all collapse? Plan reset." I think we're witnessing what a planned reset or collapse looks like, because
Well, even if yeah, sorry.
they're Bank of England in particular, they're admitting that they're in a recession, but then again they're continuing to hike in the narrative of fighting inflation. So typically, recessionary events you usually do the opposite. But then again, we have an inflation event. So it's like you're
The
trying to confuse
the the
everybody.
the reason why I think they're raising rates in a recession or going into a recession
Hmm.
is that they waited too long. And I don't
Hmm.
mean from 2020, I mean from 2008.
Yeah.
Because if you remember, here in the UK, they cut rates almost to zero. I think it was 0.25, and then they cut it to 0.15 all throughout, ever since the '08 crisis. And they kept it there for too long. So, and they dragged their feet.
Hmm.
And now, yes, we're in a recession, but if they don't raise rates, the pound would be right now probably at 75 cents, not 109. It would be a
Hmm.
lot lower. So they're between a rock and a hard place, literally. Well, almost literally. And the same thing applies for the Fed, for all the central banks,
Hmm.
and that's why it makes no sense if you don't understand that they kept rates too low for too
Yeah.
long.
Sirkin said that the USD is more than 5% down today against the Russian ruble.
Let's have a look because I do follow the Russian ruble quite closely every morning. So right now, yeah, he's well. Yeah, I've got it. I'll show you. I'll share this as well. Let's see. And it's interesting because we've been told that Russia
Russia's economy is doing bad.
collapsing. It's collapsing. And they're gonna lose the war. Uh, But if that was so, why is the ruble so strong? So there you go, US, the ruble. So yeah, we've dropped 4.3% today, the dollar.
Hmm.
It's at 57.27. And I think that's really significant. And why? Because I've been following this because my viewers asked me to go over the ruble every day.
Yeah.
And for the last month or so, it's been stuck around 60. So the fact that it's actually rising, the dollar's dropping is quite interesting. Thanks
Yeah.
for the heads up there.
Yeah. So I just pulled it up on my side here so we can see the USD to the ruble. Um, okay, let's I saw here's a super chat. Of course we're gonna try to get to more questions. I see a lot of questions out here. We got PM Galleria says social media causes loss of confidence, hyperinflation here in the US first. Domino effects for countries would be question mark. Domino effects for countries would be if hyperinflation happened here in this country, US, domino effects for countries would be what?
Well, I think it's not going to start in the US. I
Right.
think it's starting in Japan, in the UK, in Europe. And I just, before we came on, I just listened to Rafi Farber's latest video
Hmm.
on YouTube. And I recommend everyone watch that
Hmm.
because he explains that actually hyperinflation is not a monetary phenomenon. And he's right, it's a psychological phenomenon.
Hmm.
And he thinks the Germans are going to start the hyperinflation because it's in their DNA, because they've had two hyperinflations in the last 100 years. And basically, what it means, hyperinflation, you lose confidence in the currency and you just want to get rid of it for anything.
Yeah. Yeah, that is a good point there. What else we got here? Feel free to throw some thoughts, ideas, and questions from Russiagate to Chinagate. Learn Mandarin fools.
Learn Mandarin food. What about Cantonese as well?
What else we got here? I saw some. Let me go back up here. Mario, here's UK unveils 270 billion in new defense spending. Is the British Empire having a lot of savings? Having
No,
a lot of savings.
no, we don't have any savings.
Yeah, I don't, at this current moment, and that's unfortunate that, because most nations are running deficits spending, so they're spending more than they actually have. But then most governments, especially in the dollar in the G7 nations in particular, they don't even acknowledge
Yeah,
or admit anything about gold
yeah.
as their
I just
saving.
want to tell Rolf Steiner, the UK, we built a aircraft carrier, and it cost a few billion pounds to build, and it was supposed to go on a training exercise
Uh-huh.
from England to New York or the East Coast,
Hmm.
and it broke down and got stuck in the Isle of Wight. So
Yeah.
that's how well the Royal Navy, has gone from ruling the waves to
Hmm.
not being to cruise the waves.
LVP says max all credit cards and get silver.
Well, I don't know. I mean,
That's
credit,
LVP's method.
if you're comfortable, you have a steady income, and you already have a lot of metals and stuff. Yeah, why not borrow a bit of money? Because the money's going down in value. As long as you can, it's not gonna like bankrupt you. I think it's okay. But I don't really like borrowing money to borrowing credit to buy
Right.
gold and silver.
Same here. Same here. I just dollar cost average in, man, and just you do it
Mm.
long enough, you'll be surprised at how much it accumulates over time.
Hmm.
What else we got here? Let me go back. I see. Is the rising gold purely? Here's a question. Is the rising gold purely down to the drop in the pound? Purely down to the drop in the pound.
Well, it's just that the pound has dropped faster than gold has dropped. And one of the reasons why, because this morning gold was actually fairly strong, but then when the pound started dropping, uh, and I think what happens here is that the Bank of England, for example, they have 5,000 tons of gold,
Mm-hmm.
even though the UK only has 300, but they keep a lot of gold for foreign central banks.
Mm-hmm.
So what the Bank of England, I think they were doing, they're not going to tell me. I can't call them and say, "Did you do this?" But I'm almost certain that what they do, they've taken their clients' gold, they leased it to the bullion banks, so the bullion banks get that gold and they sell it
Mm-hmm.
right in the market to dry. And then what does the Bank of England get in return? They get dollars, right?
Mm-hmm.
Because they lease the gold, they get the dollars. Then they take those dollars and they buy pounds to try to stop the pound from rising too quickly. So I think that's what happened to gold.
Mm-hmm.
And of course, it's not just the Bank of England that's leasing and then selling the gold through the bullion banks, but then that triggers like speculators, hedge funds to sell the gold too.
All right.
And that's the game they play, I think,
So,
And
what you're saying is it's good to say that the Venezuelan gold is no longer there.
yeah, it's
And
probably
that's
being
why they're not. That's why
and
they're
the
not
other
getting it
thing,
back.
yeah, the other thing the Bank of England does is they rehypothecate. They'll have a ton from
Mm-hmm.
Venezuela and they'll lease it. They'll lease 10 tons on the back of Venezuela, and that's why I think it's really stupid for these countries to
Mm-hmm.
keep their gold with the Bank of England because basically they're financing our currency here
Mm-hmm.
instead of theirs.
Yeah, and here is so Nasara Jashar says Lapid announces a two-state solution at the UN. So I am not familiar with that.
Who's Lapid?
Israeli Prime. I just pulled it up real quick.
Oh,
Israeli Prime Minister Lapid backs two-state
oh.
solution for Palestinians. So
I thought the Israeli prime minister was a guy called Bennett.
he
Changed
came
already?
in. No, they've switched. I don't. They've been rolling.
I guess it's Israel's a bit like Italy. They get new governments every month.
That's what it appears to be. They've switching some things up, and they doing a new vote ballot for all. I mean, it's just craziness. It's hard to pay attention to everything, so I'm not even familiar with it. So let me know what your thoughts
Yeah.
is on that, because I don't know.
Well, I don't hold much hope
Yeah,
about this. It's been a problem since 1948.
yeah. So it's going to continue until the Lord returns, unfortunately, or fortunately, depending on how you look at it. What else we got here? Everything is rigged. 100 trillion exchange stabilization fund bankers suppressing gold price. Dow close to 20% down year to date. Wow. Crypto is dead. What else? I don't see any more questions. Do you, Mario?
Let's have a look. Sorry. Human from Earth. Nobody is building wealth in the stock market anymore for a 40-year bull market. Hence, the younger generation moving to crypto instead. I'm not sure the younger generation is.
I think most
Yeah,
of
there are some moving to crypto, but I think some are moving into other things as well.
right.
You know,
I think a lot of the young generation happen to be day trading now, like just
yeah,
trading. Like nobody really invests to
well,
hold
the
anything.
thing is, the younger generation also is usually using social media to their advantage,
Mhm.
which isn't a bad thing because we do that too. I mean, I follow because I like golf. I follow a YouTube channel called Good Golf, and these guys are in their early 20s. They started from nothing.
Mhm.
Now they have 1 million subscribers. They're very good golfers, and it's enjoyable watching them. They have a lot of, and they travel all around the world, and they're doing really well.
Yeah.
So I think we have to give young people some slack because not everyone is the same. You
Right.
can't generalize.
Very true. Very true. Someone I don't see.
Jim Watari says that it's Frozen. Who froze?
Don't know.
Yeah. Oh,
All
you.
right, we're about what 35 minutes. We get ready to dial back. So, what are we looking for? We're at the end of the month, and of course, tomorrow's September 24th. Everybody on my side is talking about
Yeah.
what's happening. So, could this,
Bo Pony.
so could this current, mini Black Friday we're experiencing now be the trigger into something come next week, which would equate to that September 24th? Be ready, yada yada yada. We'll
Yeah.
find out, but.
Well, there's definitely something going on today because I'll share this with you guys here. Hold on. This is my one of the screens that I use to see where the markets are. Hold on. And it doesn't look good. Hold on. There you go. So this is, I mean, there's definitely something going on. So tomorrow there won't be any trading, but see, gold is down quite a bit, of course, uh, in dollars, and so is silver. But look at the Dow now; it's down 2.3, Nasdaq, but look at the pound. I mean, 3.4%. That's huge because the pound. I know it's a small country here, but it's still one of the I think 5% of all global currency reserves are held in pounds, so this fairly significant. It's not
Yeah.
just the dollar. So yeah, I think it looks pretty bad. So it is kind of I guess we could call it a gray Friday, almost black,
Yeah.
even though we still have 3.5 hours, I guess, until the close.
All right. So as you were speaking, I looked at the chat, and I looked at our stream on the other side, and me and you see each other in real time live streaming smooth. But then again, it looks like the viewers see it froze. So whatever reason. So
Oh
now
yeah, someone's saying the stream
it's
stopped.
in
Yeah.
and out. So, but again, I'm not seeing nothing on my side. So
I'm not either. Yeah.
right. So let's we'll just use that as a sign that perhaps we're getting too close to the truth or talking about stuff that we shouldn't be. So
Yeah, I don't
you
know.
never know.
Could
But
be something you would Yard stream or I don't know, or StreamYard.
yeah, I'm buffering it now. So all right, well let's get ready to dial back. We're 37 minutes anyway. I'm assuming hopefully replay plays smoother, but so we are approaching the end of the month. Of course, nobody knows what's going to happen tomorrow or beyond. So let's just enjoy the moment as it is. Continue to get your weight up. Get everything you need a hold of now, just because you never know what tomorrow brings. So
Yeah.
and enjoy the day, man. It's a Friday, so
The
take some
other
time to
thing I would
unwind.
the other thing I would say, if you're fortunate enough to have a good income and some savings, uh, and you always thought of doing something special, do it now because it's going to become even more and more expensive.
Mm,
And that's the psychology, unfortunately, of inflation.
yeah,
Uh, you don't wait, because things are, especially here in the UK, but it's going to be happening everywhere else.
yeah, I do agree. Well, all right, people. It's always good to connect with you for the Mike and Mario show. Hope you guys enjoyed it. Hit that thumbs up. Manico64 on YouTube, Rethinking a Dollar, wherever you can find me. And we'll be back at it again next week. Of course, we're going to always have enough stuff to talk about, but everybody here knows what time it is and what season we're in. So just be grateful for what you have. Continue to just prepare and enjoy the moment. So be blessed, be safe. See you guys later. Peace.
Peace.